Welcome back, Grizzle. Battery metals one-on-one. Copper is the it. It's the hot battery metal, and we got one of the hottest stories, bar none. Hot Chili CEO Christian Easterday. Christian, thank you so much for joining us.
Great to be with you both.
Thank you.
All right, Christian, let's kick it off with your Costa Fuego project. It's maybe one of the largest copper projects globally that's not owned by a major miner. So given how unique this asset is, I'd just love to hear how the project came together, kind of the hot chili story, if you will.
Sure. Well, let's try to wrap up 15 years of my life and our team's
Exactly.
work into a overnight billion-ton success story. So, look, we listed the company in 2010 towards the end of the last copper cycle. Started consolidating this region of Chile, which is about 600 kilometers to the north of Santiago, on the coastline, trying to keep it low altitude, trying to keep in the middle of regional infrastructure that would advantage the project. Got a great discovery called Productora, a large open pittable 0.5% copper deposit on the coast back shortly after we listed the company in 2010. And since then have invested very heavily in the Costa Fuego project, which has now grown to be a large consolidated play. In 2019, we added the Cordillera Porphyry discovery, which lifted our resource base almost 4 times to currently sit at just under 1 billion tons and 2 bulk scale deposits. And we're continuing to build on that position as we look to further increase scale.
Great. That was a helpful overview there. Now, I wanted to talk about elevation because I know that's important in project economics. So Costa Fuego looks to be one of the lowest elevation copper projects in Chile. It's also near the ocean, and most importantly, you have a water permit in hand that you've said takes 10 years to acquire. Can you explain the major benefits to the project and to Hot Chili from elevation and access to water?
Yeah, no, great sort of points, because they really are two of the key differentiating points on this project. You know, there are not a lot of large scale copper developments in the world that are outside of the control of the majors. So when you've got literally those large projects such as our peers over in North America, the Philos, the Solarises, the SolGolds, the Los Andes, when you only have a few companies developing those projects, and most of them sit at high altitude without water secured, certainly Costa Fuego differentiates. We're under 1,000 meters. The location of our central processing hub is about 740 meters altitude, 50 kilometers from port, right on the Pan American Highway. It's probably the lowest altitude of any of the senior projects in the world. And what that really means is that we get a significantly lower operating cost on our study, and we also get a very, very reduced capital cost. The project is about half the cost of any of our peer projects to put out a large amount of metal production, which is currently studied at a rate of around 100,000 tons of copper production per annum and around 50,000 ounces of gold per annum. So elevation is one of the key differentiators. And then secondly, when we look at the water situation, you mentioned it took Hot Chili 10 years to secure its maritime concession to extract seawater on the coast. And included in that was the last 2 years was also securing the actual physical land on the coast. So we are one of the only large-scale developers in the world that is holding a maritime concession. Now, that is very, very important as a de-risker if you actually want to build a large-scale copper project in the medium term. I think that some of the recent articles on the concerns of supply for the global copper sector really relate to water scarcity and water security. And this is one of the key things that is holding back major developments, particularly in Argentina and Chile, where some 1/3 of the world's global copper production comes from. These projects are starved of water. They're high altitude in nosebleed countries. They're very high capital intensity. So it makes it extremely unique that Hot Chili after 15 years of investment on the coastline, has built such a large-scale hub. And we find it very hard to find any large-scale project that has those credentials.
Christian, it's interesting that like when you look at other corporations' presentations, they really don't talk about this elephant in the room. It's just is this something the industry as a whole just has is choosing just to push to the side? Like this is like real, and you guys are in a very advantaged situation. I just wondering your thoughts about the industry as a whole.
Yeah, well, obviously, look, CEOs want to talk about their strengths, and that's fine. We talk about our strengths, and I think, that, as you say, it's an elephant in the room. Perhaps this relates to either the timeframes and the difficulty through permitting to acquire such assets. As we mentioned, 10-year journey for Hot Chili to secure those assets. Perhaps we'll see those processes streamlined in the future, with governments such as Chile making some statements about that recently. But what it really comes down to is Hot Chili from the beginning has set out to systematically de-risk this project, secure all of the permitting we require, the easement corridors, the surface rights, the water rights, the power transmission connection to the central grid. All of these things you require if you're going to build a project. And perhaps maybe Hot Chili never started this journey with a for sale sign in our front yard.
That's a great rundown of what can drive project economics beyond just grades and the typical things you think about. Now, I wanted to talk about the backers of Hot Chili because you have some big ones. So mining giant Glencore is a major shareholder. They're right around 9%. Now, I'm curious, when did they initially invest, and what do you think specifically drew them to Hot Chili of all the copper projects in South America they could have invested in?
Yeah, that's a really good question also, and luckily I have a great relationship with some of the senior management and executives in Glencore. Glencore took an investment nearly 2 years ago now. It was a strategic investment. They invested to take a position of 9.9% in Hot Chili at the time. There were several larger companies and corporates that were looking at that strategic block that Hot Chili had available, really to bring on a strategic partner and shareholder that had a significant amount of experience in the large copper business. Glencore on a yearly basis is either the second or third largest producer in the world, and no doubt that will probably that position will continue to be cemented. So, with over 4,000 employees in Chile and major operations in Chile and globally in the copper sector, they're an extremely knowledgeable partner in terms of constructing projects, operating projects. And I guess their comments to me was, they'd gone through the projects not controlled by the majors, and their global team has a very significant database, and they were able to identify Hot Chili as one of those projects, I think, really that represented one of the lowest risk projects capable of meeting production before the end of the decade. And so it was about scale, it was about location in Chile, low altitude water, and really the overall risk profile of the project. And so those were really the primary drivers, I guess, that I've been told for Glencore's investment. What was really unique is that Glencore came in and made that strategic investment without a 100% life of mine offtake, which is very typical of a Glencore investment in this sector. So that was something that we were very keen to ensure that we maintain that optionality on our offtake, so that we maximised our non-dilutive funding optionality as we approach financing investment decision. So that was key for us. However, we did want them as an offtake partner, and we were quite prepared to bring them in as our benchmark term offtake partner for 60% of our offtake on just the first 8 years of the project. So what that means is we have probably one of the strongest global partners for offtake. They handle over 52% of the global copper concentrates in terms of trading. And it means that we also have a significant amount of interest. We have some 160,000 tonnes of annual copper concentrate that is non-committed. And that means that we have a significant amount of interest from other global offtake partners in the Japanese, Korean, and global space. And I guess the second very interesting thing about the Glencore deal is we have a very aligned, I guess, strategy to develop this project. And, I guess when Glencore signs up to, the fact that they will be able to hold a 9.9 position and they have to maintain a 7.5 position to maintain their offtake, and their director on the board, the head of their global copper group, Mark Jameson, then that's really quite a unique aspect of the transaction we undertook with Glencore. So great to have them on board.
Now, so that was a really great, pulling behind the curtain a little bit. Thank you for taking us there. I just want to talk about resource quickly here before we run out of time. So you have 2 mineral resource upgrades planned over the next year and a half. I guess it's safe to assume that you expect your resource will be above the current 3.4 million tons by the time you make a construction decision. And secondarily, as resources go up, should we assume that the economics of the project could improve as well?
Yeah, correct. And look, it's a very simple strategy. We've been clear from the beginning. We feel that this entire regional area on the coastline, this regional consolidation effort that we're putting in, we're not finished. Over the last few months, we've been focused on exploration and resource growth through the drill bit. We've been recently pivoting towards our new growth pipeline of targets within our own land holding. And we've also been going through what I describe as a period of harvesting within the region. So we've been harvesting tier 2 family-run operations and discoveries that have been made in the region for very low-cost option agreements that allow us to get in, have a reasonable amount of time to put drilling into these projects for the first time that sit within close distance to our central processing hub. And what that effectively means is we're skipping discovery risk for often a $50,000 or a $100,000 option payment to give us access to the properties, and then an agreed purchase price should the deposit meet our criteria. So at the moment, we're pushing resource growth on the exploration front. We're continuing the consolidation of the region. We've announced 3 new areas that have come in the last 3 months. There will be more announcements on that front. And most importantly, there are a number of tier 2, but also tier 1 opportunities, which the company has been pursuing. We see this 100,000 tonne per annum copper production hub growing towards 150,000. And to do that, we're obviously very focused on growing that circa 930 million tonne resource base and looking to double that over the coming years as we approach FID, primarily through the drill bit and through further consolidations in the region.
I like that strategy. That's an interesting strategy. Now, before we end off, you have a really good chart in your deck that shows your project roadmap. So you're fully funded for at least the next 18 months. Can you just quickly take us through what the most important milestones are coming up that viewers and we should be looking for?
Yeah, look, I mean, just firstly, what's standing behind that time frame? We're in a soft market. Hot Chili spent its time very wisely last year looking at its funding optionality. We were able to secure around July an agreement for a significant investment by Cisco, some $23 million being invested by the Cisco Gold Royalties team into this project for a 1.1% effective royalty over production. And what that means is, yes, we're one of the few companies that avoided significant dilution this year in a soft market, and will continue to ride through this soft market well-funded and without a funding overhang. So that gives us enough oxygen to target our growth strategy, deliver our next resource upgrade toward the end of this year. Perhaps that may be pushed into January. Our team are working very hard, and hopefully we get there before the Christmas deadline. But most importantly, look, our pre-feasibility, which is largely complete, and that's very, very helpful when you don't have to start funding an entire pre-feasibility and you have 80% of the pre-feasibility complete. We'll be looking to deliver that towards the end of next year. And obviously the time between now and then is all about our scale up opportunity. If we can do that, then ultimately we are able to drive the C1 cash cost, which is in a very competitive position at the moment at $1.33 per pound US, net of byproduct credits. But look, what a scale up does for us is drop that cash cost towards the $1.10 per pound territory and firmly within quartile one on the global cash cost curve. No doubt, as we approach financing and construction on this project, the cash cost curve continues to drive to the right. So anything we can do on economy of scale to make sure that this project is insulated regardless of copper price really just makes sure that we're one of the first in line for financing. And we believe that the latter part of this decade is going to be very, very attractive with very different economics on these large-scale copper projects. So certainly our timing to pre-feasibility next year and then our 2-year planned bankable feasibility while we're going through our approval process on our environmental impact assessment, which is on track to be also delivered towards the end of next year, puts us in a really strong position that we'll be delivering one of the first 100,000 tonne per annum copper projects outside of the majors before the end of the decade.
Great. Well, Christian, that's all the time we have, but I don't know about you, Tom. It feels like Costa Fuego is kind of a diamond in the rough. So thank you so much for stopping by, telling us more about the project. And we look forward to tracking development as you move through time. So that was Christian Easterday, CEO of Hot Chili. Thanks for stopping by.
Thank you.